Good afternoon, traders. Welcome to the Moor Analytics Afternoon Energy Podcast for July 24th, going into the 27th. To start off with natural gas. We left a minor bearish reversal above yesterday. Okay, just as some backup, we've been bearish since $8.20, 0.8. We've seen $6.68.6 so far to the downside. A lot of other medium and lower term calls in here. And the trade back below 331.40 brought in 491 ticks of pressure. And we outside a bearish call below 319.30 and 312.30. Those are all off hold. And then the trade below here at 293.80, more under pressure. We came off, pulled right back up to the line, and rolled over here. Decent trade below. This formation below is going to come in at 285.90, plus 0.3 of a tick per hour starting at 6 o'clock p.m. Eastern Standard Time Sunday. That'll warrant of decent pressure. If we break below there decently and back up through it decently, look for decent short covering to come in. A decent penetration in there is going to be 31 ticks up until the Monday open at 9 o'clock. If we happen to leave a maintain gap higher on Monday, that would leave a medium bullish reversal below that will warrant a higher trade for days/weeks. And if that starts us in a bona fide bullish correction, it should exceed 599 ticks from the low. Okay, crude oil. Left a minor bearish reversal above on the day, but we have not yet taken out 85.78, which is needed to give this more credibility. A maintain gap higher on Monday would leave a minor bullish reversal below. However, in addition to leaving that, we'd also fail back down through this line, which I said to get short below. But let's get some backup from where we're at in here for a second. So the break back above 65.91 has brought in $25.59 of strength. On July 7th, we left a minor bullish reversal below that, attained $22.78 from the 70.72 open. On the 8th, we left a medium-term bullish reversal below that I said warned of higher trade for days/weeks. We've rallied $19.67 from the 73.83 open. The trade above 78.75 warned a continued strength. We rallied 14.75. And then the trade above 85.64 brought in $7.86 of strength. However, I put those all on hold this morning. I said the trade below 90.73 now warns of pressure. If we were to break back above that formation decently on the upside, which is going to come in at 91.43, plus 5.4 per hour starting at 6 o'clock p.m. Sunday, that would warn of renewed strength. If we fail below 87.26 plus 6.5 per hour starting at 6 o'clock p.m. Sunday, that will warrant decent pressure. If we break below that decently and back up through it decently, look for decent short covering to come in. A decent penetration is going to be 96 ticks up until the Monday open. Okay, and in the RBOB or unleaded gas, we left the maintain gap lower on the day. The maintain gap higher on Monday will leave a minor bullish reversal below. Okay, the trade above 287.06 brought in 66.34 cents of strength. We had a number of other places I suggested to get long above at 295.75. On July 6th, we left the medium bullish reversal below, which I also said warned of higher trade in general for days/weeks. We've seen 55.87 cents from that. We had a bullish call above 299.44, 304.58. And on the 13th, we also left a minor bullish reversal below. That it brought in 47.99 cents of strength. And I said this morning that those all rolled into SEP and are on hold. Failure below 330.31, I said warrants pressure, and we've seen pressure down to 321.82. In the heating oil, we left a minor bearish reversal above on the day. Oh, and I would just back up and say, I did say yesterday in the post-market synopsis that in the crude, despite gapping higher, that it warned of pressure overnight before/if resuming higher trade. And from the close at 92.19, we came off down to 87.68. Similarly, in the RBOB, I said the same thing, and we've come off from 332.42 down to 321.82. And likewise, in the heating oil, I said we'll likely see pressure, and we've come off from 423.70 down to 407.44, also leaving a minor bearish reversal above on the day. And we also failed below this formation right here. But just giving a little backup on the heating oil, the trade above 320, even 04, brought in $1.18.46 to the upside. I also had bullish calls from 317.53, 324.15, 327.58, 353.53. Those all roll into SEP and are on hold. And the failure below 418, and then in the Augie contract we said above 376.05. I warned of strength. We've seen 52.83 cents of that so far. However, those are all on hold. The failure below 418.52, I said warns of pressure, and we've seen pressure down to 407.44. Decent trade back above that line, which is going to come in at 422.95, actually 422.96, plus 32 per hour starting at 6 o'clock p.m. Sunday. That'll warn of decent strength. A maintained gap higher would also leave a minor bullish reversal below. That'll be more effective if we take out 417.97 in the process. Okay, and in the Brent, I also said that it warned pressure overnight before/if resuming higher trade. And we traded from the close yesterday at 169, down to 95.13. We also left a minor bearish reversal above on the day. However, we have not taken out 95 even, which I said is needed to give it more veracity. I warned the 69.38 to 67.80 general area was the final area of exhaustion. Came just shy of that with a 70.14 low and rallied $31.86. Also on the 7th, we left a minor bullish reversal below in here. We saw $29.21 to the upside. On the 8th, we left a medium bullish reversal, and we rallied 24.56 from the 77.44 open. Trade above 78.48. Brought in 23.52 of strength. I cautioned we were approaching possible exhaustion at 99.27 to 1 even. Actually, we took that out. My apologies. This should have been taken out this morning. My bad. We took that out here, and we rallied up to 102 even. And I said a maintain gap lower will leave a minor bearish reversal, which we left in place. The maintain gap higher on Monday will leave a minor bullish reversal below. Decent failure below 95.12, plus 9 per hour starting at 6 o'clock p.m. Sunday. Will warn of decent pressure. It would be ideal, however, if we see at least a 56 tick bounce off the line prior to breaking below it to give it added credibility. If we break below it decently and back up through it decently, look for decent short covering to come in. A decent penetration in there is going to be 106 ticks up until the 9 o'clock open on Monday. Thereafter, it'll be 94 ticks. In the gas oil, I said also in here that It went out warning of pressure overnight before/if resuming higher trade, and we've traded from 12.31 down to 11.75 and a quarter. We also left a minor bearish reversal above, warned about, and then we fell below this formation, just giving a little bit of backup though, and trade above 896.59, brought in 398.91 of strength so far. I said on June 30th that we left a medium bullish reversal below, warned about, which I said warns a higher trade for days/weeks. We've rallied 385.75 from the 909.75 open. And as you may recall, when we left this medium bullish reversal below, I noted that this would likely be a leader on the upside, and it would be a harbinger of the rest of the complex turning. So we've seen a nice turn on that. And then we had bullish calls above 914.25. We've seen 381.25 from that. And then above 942.75, we've seen 352.75. And above 3,960.22, we've seen 335.28 of strength. Those all rolled into the SEP and are on hold. Then I said the trade below 12.21.12 plus 63 per hour, warned of strength, and that the trade below 12.03.35 also warned of strength, and we've seen pressure down, warned of pressure, and we've also seen that down to 11.75.25. Decent trade back above this formation is going to warn of renewed strength. That's going to come in at 12.17.14 plus 106 per hour starting at 6 o'clock p.m. Sunday. Decent penetration in there is going to be 11.9 up until the Monday open. Okay, as far as going into Monday, the cadence is concerned, the heating oil is the weakest of the three, the RBOB in the middle, and the crude the strongest of the three relative to one another. Keep in mind also, I said that we left a medium bearish reversal above and the RBOB crack, which warns of pressure for days/weeks. If we leave a maintained gap higher in there on Monday, that'll leave a minor bullish reversal below, which will negate that medium bearish reversal above and warn of a run for these highs up here at 53.93. I would also note that I'd said in the RBOB to heat spread, we left a minor bullish reversal above here and a medium bearish reversal here that warned of pressure for days/weeks. We've seen this come off here for a couple weeks now. However, I did say in the RBOB to heat that this was approaching exhaustion down here and that a maintained gap higher would leave a minor bullish reversal below, which we have seen. If that further gets above this trend line right here, that will also further warn of heading into a bullish correction against that entire move down. That line is going to come in at 84.19 plus 0.5 of a tick per hour starting at 6 o'clock p.m. Sunday. And bear with me a moment. A decent penetration there is going to be 225 ticks up until the Monday open. Thereafter, it'll be 201 ticks. And okay. I would also note that a maintained gap lower in the heating oil crack will leave a medium bearish reversal above. And in the heating oil crack, we also failed below a formation right here. Did we right back above that? Let me just double check something. T2 by 130. Nope. Had to get above it by 130. So that was not negated. But the failure below this line warns of pressure for 400 or 390 ticks. Decent trade back above where that's going to come in at 83.65 plus 0.5 tick per hour on Sunday will warn of decent strength for 390 ticks. Thank you for watching, and I'll see you in the next podcast.